Okay, now that you know how your chart works, let's get into how you actually make money, the exciting part. So, how this works is you have got price on this side, and price moves within points. As you can see, price is moving within points. So it moves by 1, moves down by 1. Now, how this works is with Forex trading, you can either choose to buy or sell. So let's say you place a trade, right? And it is a buy trade. Now, when you are buying, what you are saying to the market is, from this point, I expect the exchange rate to go up. So, for example, if we are looking at Euro USD, you are saying, I expect to pay more dollars for every 1 euro. So now you are trading the movement of the exchange rate. So if it does move up, you are going to make money. But you make money in terms of lot sizes. So a lot size basically tells you for every point you move up or down, how much money are you going to make or lose. So, for example, if we have a lot size of 1.00, for every point price moves up 1, you are going to make $1. So, let's say over here we have got 1, 2, 3, 4, 5, 6. Right? Now this is the price that we are currently at. So now it moves up from 1, 2, 3, 4, 5, 6, 7 to 1, 2, 3, 4, 5, 6, 8. If it moves up by 1 point, remember this move from 7 to 8 is 1 point. So if it moves up by 1 point and you are trading a lot size of $1 per point, which is also called a standard lot, you are making $1 at this point. But if you are buying and we move down to 1, 2, 3, 4, 5, 5. 5, 6, 6. If we move down to this price, then we will be losing $1. This is what happens when you buy. If you buy and price moves up, you make money. But if you buy and price moves down, you lose money. Now, the opposite applies to selling. So, if we place a sell trade, and our sell trade is at 1, 2, 3, 4, 5, 6, 7. And price moves down to 1, 2, 3, 4, 5, 6, 6. Then, if you are trading a lot size of 1.00, then you will be making $1. But if price moves up to 1, 2, 3, 4, 5, 6, 8, then you will officially be losing $1. So when you are selling, you expect price to move down. When you are buying, you expect price to move up. And that is how you make money. So if you buy and price moves up, you make money. But if price moves down, then you lose money. So if you sell and price moves down, you make money. But if price moves up, you lose money. Now let's look at this practically in the market. Now there are two ways in which you can place trades. The first place is new order. Now under new order, you'll see volume, and that is your lot size. So let's change that to 1, 0, 0. Now we will get into your stop loss and take profit a bit later, but your trade type, if you want to enter immediately, should be market execution. So what we're going to do is we're just going to place a sell, and automatically we are placed into a sell. This green dotted line over here is our trade. Notice how it gives you our trade number. It tells you that this is a sell and you are using a lot size of 1.00. The other way in which you can trade is you can right click and select one-click trading. Now one-click trading also allows you to instantly enter the market by clicking buy or sell. And then in the center over here, this is also where you can change your lot size. Now we sold using new order, so we are going to buy using market execution. One-click trading. Now the first time you click buy or sell, it's going to give you this pop-up. Just say I accept and click OK. So let's buy. We are automatically entered into our buy trade. Now, pay attention to price moving and look at the figures. When price moves up, our buy trade becomes less in a negative. Whenever you place a trade, it's always going to start off in a negative because you are going to have to pay broker's fees. So, you first need to cover the negative that you are charged for the fee of actually trading, and then after that all the money you make is yours. So watching this trade, pay attention to how as price moves down, your buy gets more into a negative, but your sell gets less into a negative. And pay attention to how your sell gets less into a negative as price moves down. So pay attention to this price and just look at how the numbers fluctuate. Now that you've seen how the numbers fluctuate as price moves up and down, let's try and set take profits and stop losses. Now what a take profit is an order that you are telling the market, when you reach this point in price, take me out of the market with a profit. So when you are already in a trade, there is two ways in which you can set your take profit and your stop loss. So if you are in a sell or a buy, it does not matter. But if you are selling, you make a profit when price moves down. So you drag your pending order down, your trade down, and this is your take profit. Notice how it tells you how many points away from your trade you are. That's 165 pips. And it also shows you how much profit you are going to be making once price reaches this point. So once you let go, the market will automatically set it. So if you hover over your take profit, you will be able to see how many points it is, or pips rather, and how much profit you will be making. And even after you've set it, you can move it up or down again. Now, the second way, we're going to use your buy order to show you this way. You right click and you select modify. Now, how do you make a profit when you are buying? Price needs to move up. So we are going to say copy as, and then move price all the way to the top, and then just click, and your take profit has been set. Your take profit price will be set under TP. Now for your stop loss, in order to set your stop loss by dragging, you just hover over your trade and you will see the 2 arrows pointing up and down, and that'll mean that you can now move or modify your trade, and you can move it all the way up. Notice how over here it says stop loss. SL is an abbreviation for stop loss. TP is an abbreviation for take profit. But if you hover over your stop loss, you will be able to see how much of a loss you are making. So you're also moving backwards by 225 points, and your profit is $225. So you are losing $225, I mean. So as you move your stop loss up and down, can you see how it also changes the figures as it moves up and down? The second way you can do it is, again, right click, modify, and then you just select copy as. Now you are buying, so you make a loss when price moves down, and you just want to move it down to make it go further, but you could also just click that. So that's how much we are making. Now even if you use the other method, you can still move this up and down. So this is the stop loss for your buy. You can move that up and down. Now to delete your stop losses and take profits, you can right click on your stop loss and cancel stop loss. This does not remove you from the market in your trade. It just cancels your stop loss. Same thing with your take profit. You can right click and cancel take profit. So let's cancel all our take profits and our stop losses. But your homework is to go and place take profits and stop losses and watch how they take you in and out of the market. You need to watch for that so that you understand how trades work. Now, another way in which you can exit a trade is by manually exiting it. So over here, we have got 2 negatives. Now, let's say that we think that the overall direction of price is going to be down. Okay? So we can then just decide we are closing one trade and it will automatically close. And then if we decide we want to close the other trade, you just hover over the X and you close. Now when you go to account history, you will then see the 2 trades that you closed. Right now, because we obviously just placed a buy and sell at random, we have made a loss. Later in the course, we will be teaching you when to buy and when to sell, because that's where the money is. But for now, I need you to practice placing these trades. And also, let's get into your lot size quickly. Now, when you change your lot size when you are trading, if you are trading 1.0, then that means you are moving by $1 a point. Then 0.1 is 10 cents a point. 0.01 is 1 cent a point. Now we'll teach you which one will work best on your account based on what size your account is when we deal with risk management. But for now, play around with your lot sizes so that you can see how you make and lose money using these lot sizes. Don't focus on making or losing money right now or just yet. Rather, focus your time and your energy into making sure you know how all these functions work. Now, when you are placing your take profit, you need to take spread into consideration. So you want to right click and make sure spread is selected. Now the spread is obviously your broker's fee. You saw that when we entered the market, we were automatically placed in a negative. I'm going to place a buy with a lot size of 0.10. Notice how we are trading Euro USD and the spread at this point is, well, it was 24 when we placed this trade, which is why right now price has not moved, but we are in a negative $2.40. Now how you calculate your spread is you just take whatever number of points the spread is and you multiply it by the lot size you are using. So right now 10 cents a point times 25 points is what the broker is charging you. It does not charge you dollars. It charges you in points and what lot size you are using. So 24 points times 10 cents will give you $2.40, which is what our spread was. But also pay attention to how it now moves within 10 cents a point. But play around with these things. So now when you place your take profit, you need to place your take profit with spread in mind, because in order for your trade to take profit, remember your take profit exits you from the market the minute price passes your take profit. So it has to pass it by the same amount as spread, then it will take your profit. So this line is not where price will take your profit. Price has to now pass your take profit before it actually takes profit. So make sure that you go home today and you practice making yourself take profit. Just do guesswork as to where you think the market is going to go, or just place trades and leave them. Place both a buy and a sell and trap the price. And then if price moves up, then you will watch your take profit take when it moves up, and if a price moves down, you will watch your take profit take when price moves down. But make sure you know how your take profit actually works. Okay, so that's all for this lesson. Let's move on to the next one.
Well done. Do not forget to place trades. The most important thing throughout this entire process is that you practice spotting your patterns and that you practice placing trades based on them. Even if you lose, it's okay. It's fake money. The aim is to just get the principles right. Fail as much as you can and as often as you can so that you learn from your mistakes. Now let's keep going. Let's get placing those trades and let's do it.